Let's get to Bob Pisani and see what's moving on the floor. Morning, Bob.
All for the lows, but not much here. Interestingly, Asia's up overnight, although Europe is down. That's very curious. A little bit of a divergence recently. Just take a look at sectors. No surprise here. Gold. We could close at a 7-year high on gold, by the way. China shares have been outperforming. Here's the broad China index up again today here. Banks, big losers. Energy, big losers. Industrials, all underperforming the overall market. You want to take a look at, obviously, stocks impacted. We're looking at entertainment stocks. For example, here, travel entertainment, that's not a typo, 11% Royal Caribbean, Marriott, Delta. Look at Live Nation, too. They've had the same problems. Live Nation, Madison Square Garden, concerns about sporting events, entertainment events potentially being canceled here. They're moving along with the same travel and entertainment group. We're all trying to figure out earnings. Basically, Q1 earnings estimates in the U.S. are kind of worthless right now. But you want to look at Europe because they're dealing with real-world impacts over in Northern Italy right now, and the numbers are coming down fast. These are European earnings estimates for the Stoxx 600, up 7% January 21st, today down 1.4. But if you look at some big sectors like industrials, there's been a virtual collapse in the estimates for the first quarter in the industrials. Just put that one up there, and you can see we're going down here rather dramatically here. 5.4% January 21st, today 17%. Look at that collapse here. That's what you want to look at here because they're dealing with the real numbers and the real estimates that they're getting here. I think these are better numbers than we have in the United States right now. Let's move on. There are people trying to two camps here, short-term and long-term. So MSCI, they had a scenario out today. Short-term, if you have 2% growth here, stocks could fall another 11%. But they short-term, the markets will bounce back. And that's the general scenario everyone's had because that's the way these other outbreaks have occurred in the past. But longer term, and this is the big X factor, nobody can know, is whether this is going to be longer term, there's going to be a more significant earnings impact. So are you in the short-term camp or long-term camp? We really don't know. Here's something encouraging. This is what the optimists keep pointing out. Air pollution statistics in China have been increasing in the last few days. Remember, they went way down at the end of February? They've been increasing, indicating people are going back to work. And the markets are bouncing back here. Look, here's the bottom for China. This was the end of January. That was the stock market in China, bottomed at the end of January. Here's our stock market. We had bottomed at the end of February. The optimists are saying, well, maybe if this plays out in the next few months, our market bottoms sometime around here or the next month or so and then comes back. We don't know if this is going to happen, but the optimists, I'm not calling them bulls, the optimists are saying, look, this is a very good sign. So you want to look long term, what's the numbers to look for? The S&P 500 bottomed on February 28th. There we are. And the intraday swing was 100 points on that day. So the bottom was 29.54. There's 30.57. We're 100 points above that, as you can see. But the intraday was 28.55. So a very wide range here. But a lot of people are watching that to see if you don't want to use the word peak coronavirus. Obviously, that's not the way to look at this. But the important thing is people are hopeful that somewhere there's a bottom here, assuming this is a short-term phenomenon we can deal with in the next quarter or so. That's what we can't answer. That's why the markets keep gyrating like this.